at the 10-year, I go and look at the 10-year treasury, right? And the 10-year treasury is, it's amazing what's going on right now. It is down to 2.95. It was up to 3.02%. And it has actually gone down. The yields have dropped, which is freaking amazing, which tells me, here's what it tells me. What it tells me is the economy is more worried about a recession than they are about inflation. Let that sink in for a second. See, all the big money goes to Wall Street. All the big money is controlled by really smart people. Really smart people control what happens to yields on the 10-year treasury, to stock prices. When we see yields go up earlier in the morning to 3.07%, 3.07 on the 10-year, and then they just dropped 12 basis points in a matter of an hour. Do you understand what that means? That's huge, huge, huge information. What that means is that the economy is more worried about a recession than they are worried about inflation, which means rates are going to come down. I thought we were going to see the rates go through the roof, and we did. We did. And I said, bye-bye low interest rates. But now what it's showing me is that the economy is more worried about a recession. And that's the legitimate concern as well.
All right. So what does this mean in English? Let's just say that I am a casual real estate professional who's happened across this video, Fred. How does this affect me in real estate?
Well, so typically real estate is considered to be a hedge against inflation, right? Great. Okay, let's buy real estate, because if we buy real estate, rental prices are going to go up, and that means your cash on cash return gets you a higher percentage. And for those hedge funds and all the Zillow offers and I offers and all these different companies, Redfin, that are still buying real estate, even though Zillow lost 880 million and shut it down, but there's still companies out there doing it. What does that mean for them? That just means the rents are going to go up, because when we have inflation, rents go up. Now, what we got to pay attention to are the job losses. What is going to happen on next month's jobs report? Because all of the mortgage industry, Sprout Mortgage just shut down. All these other lenders are laying off 80 and 90% of their workforce. Loan Depot just laid off half.
20, yeah. I just saw the Loan Depot one.
Brendan's awesome. He's freaking hilarious. It's like taking the addict from heroin over to meth. You don't really fix the problem, you just change the addiction. Okay, well, look, great. All makes sense. Everything, whether you think it's more of a problem that we're having inflation, or whether you think it's more of a problem that we're going into a recession, the inflation is going to cause the recession. That's the bottom line. And the reason is because wages are going up, 5+%. And now inflation is 9.1%. So what's happening is our disposable income is less per month. That means your wages are going up 5%, but everything else is going up 9%. So there's a negative 4% disparity. And since the average American lives paycheck to paycheck, that disparity means that they have less money to spend. And if they have less money to spend, guess what? People don't buy as much product. And we go into a recession. And it's predicted on July 28th that we are going to have negative 2.1% GDP. And if we have that, then by definition, we will be in a recession. So
by definition, right now, Fred, are we in a recession?
Well, you know, by definition, we don't have
all
the
right,
data.
by actual facts and numbers from your perspective.
By what's going on in this economy, yes, they are more worried about a recession right now than they are worried about inflation. And inflation is causing the recession. So yes, it is a huge problem, which is going to keep rates low. Okay, so that's incredibly good. But the incredibly bad part of it is, what advice do we give sellers?
Well, and the discussion becomes, again, I'm not talking about the top tier real estate agents who keep up on the economy or the market. I'm talking about the rest of the real estate profession. And I keep saying it. How do you guys not like? I don't think that a normal real estate agent, a typical real estate agent, a typical investor sees the importance of this information and the direction of the market. That has been my stance for almost 18 months, that they don't see the writing on the wall again. And when you're talking about literal cities that are going to depreciate by 20 or 25% based on what's occurring right now, and I'll talk about those in a minute, but based on the numbers and where we're going, is there any way for real estate to hold its value in the coming years?
I don't see it. I don't see it. I don't see it. I think rental prices are going to continue to go up, which will keep commercial real estate steady. It will, but there's a whole nother issue with commercial real estate, with home offices and people working from home and people downsizing the amount of office space that they use. And then there was an issue with, I even asked my own father, who owns a lot of commercial real estate, what was his delinquency during COVID, and it was a 30% delinquency. 30% of his tenants weren't paying rent. Now, granted, my father is a CPA. What do CPAs do? They do tax returns. What do people who do tax returns know about? They know how to read tax returns. So my father knows how to find good tenants who make money. You know, he's not going to lease his properties to idiots, people who are like me, who don't want to pay taxes and have a lot of expenses. And so my adjusted gross income every year and the profitability of my corporation shows very close to zero, even though I made a lot of money. So my father knows how to find those kinds of people. So commercial real estate is still a question mark for me, but apartment buildings, I think, are going to be hold their value very well.
I do too, especially when you're talking another. Well, the number of rental people that are about to be evicted is a staggeringly high number. Like, there are things about this market that I have yet to figure out how they're going to justify before the end of summer. And even if you're just evicting 2 or 3 million people before the end of the year, that's a lot of people, Fred. It's a lot of people.
Well, yeah, it's a 13.4% delinquency in rentals right now, which is double what it was before the pandemic. California is 14.1%. And the finish my thought on the prices of apartment buildings, I think they're going to stay steady, because that's going to be the safest investment until the economy starts losing jobs. Once the economy starts losing jobs, then they're going to have more people sleeping on their parents' couches and more families doubling up in houses until they find their jobs again and can go out and rent another apartment or a home. So you got to watch the jobs report as far as what happens to rental prices, because those things go hand in hand. Houses, forget it. Houses are coming down. The Fed wants it. It's happening. And as houses come down, people are going to be more willing to walk away when their equity starts dwindling. So that all just depends on people who bought in 2020 and 2021 and 2022. The people who bought way before that, they still have plenty of equity in their home. So we're just talking people who purchased in the last 2 or 3 years. Those people are going to be more willing to walk away from their equity.
Welcome back to 2007 all over again. It's the same comment I made when I spoke in 2007. Sometimes you have to do that. It's gut wrenching for adults, certainly. But I would do it for my child at any age. I don't know why. Well, I wouldn't put it past my parents, but I'm sure my family, were economic strife to hit me, they would take care of me on some level. It's natural, right, to care for within the family, which brings us to the bigger issue. What's about to happen next, right? So let's talk about this. I actually think that next week they're going to raise the interest rate before the announcement of a recession, Fred. So I think it would be better suited for them to raise the lending interest rate back up to close to 6 or even higher than 6, maybe 6.25 as of next week. There's a bold prediction, Fred. Ready to put the Lamborghini on this one? 6.25 by the end of next week, or at least before the recession, so that when the recession happens and they drag it back to 5, it seems like relief.
Okay, so if
that's not crazy. That's, by the way, that's not crazy.
And I like, these debates with you, because I don't always agree with you, and that's great, because because I was already wrong once, so I'm okay being wrong a second time, but I wasn't wrong in the fact that I said rates were going to go up. I just didn't expect they were going to go up as much as they did. I was just underestimating. So here's what I think. I think the economy is more afraid of a recession than they are about inflation. And because of that, the rates are going to stay low. I agree with Brendan. And so if that's the case, even if they look at this. Okay, we saw at the last Fed meeting, they raised short-term interest rates 0.75 point. We had a bet on that one, by the way. You said 1/2, I said 3/4. You remember that bet?
Yes.
Okay. When they raised it 3/4, interest rates went up 1% in 2 days. 1 full percentage point on mortgage interest rate. In 2 days, it went up 1%. What happened? A week later, the rates came back down 0.875% because of the word recession. So the recession word is going to keep these rates low. We'll see. We'll see. Popcorn, anyone? Anybody want some popcorn?
Oh, no, this is a total popcorn moment, right?
Yeah.
So, and I, again, think that you take them up to bring them back down to make that all happen, which takes us to the 5 most overvalued housing markets that could see price plunges up to 20% when the recession hits. You guys excited? Some of you are in these markets. Number 1, the one I have talked about the longest, which is Boise, Idaho. Boise, get it correct. Boise. They saw an enormous housing boom during the pandemic, right? Now they are 73% overvalued, Fred, according to Moody's. The population grew by 3.3%. The city was listed as the number 1 livability back in 2019. They are actually seeing I think they have 2 or 3 months already of inventory on the market, but yet the prices are still holding up. So if you're wondering for your market, you guys can probably absorb about 3 months of inventory before you show any kind of shock to pricing. But Boise has been the one climbing and the one most overvalued, and they are literally the first one to go. Secondly, Colorado people, Colorado Springs. Yeah, popular. Things have become heated in Colorado Springs. The 10-year home price increased. Everything about this place is out of whack. They're starting to show signs of cracks. They're the second one to go. The third one, Las Vegas, Nevada. How did you not think it was going to be Las Vegas? I mean, who's going to pay 482,000 for a median price house? Like, where do you work in Vegas to pay for a $500,000 house, Fred? Like, it's all industry stuff. Like, that's crazy to me. The next, which you guys in Arizona are not going to like, Phoenix, Arizona. The number of residents, the pricing, everything is completely out of whack. We already know that Zillow thought it was one of the first markets to go. And the last is Cure d'Alene, Idaho, based on the numbers. But I would give Coeur d'Alene, thank you. And the runner up, I still say this, is New York. Like New York's got to be right in here with Coeur d'Alene in my mind.
You know, Coeur d'Alene is that one golf course when you get in a boat and you go out in the boat and the green actually moves.
Oh, it's the floating island.
Yeah,
It's the floating island.
They
Right.
can change the distance of the hole
Right.
because they can move the green. It's like on a remote or on some type of motor.
I think they've got
So-
a knockoff at Paiute out in Vegas where they've got a little floating island that's pretty close to that. But those are the two cities that are kind of on the fence, Coeur d'Alene, and I keep saying it, New York just keeps popping off the map at me. Like I don't know how they're going to get around it unless they don't allow evictions, basically like LA County's doing. But if you couple all these factors with the overvaluation, these are the markets that are going to be first affected. And if you factor in evictions and, it's going to be bad, Fred. I'm actually, it's really dogs and cats living together in mass hysteria kind of stuff.
It's comical. I mean, it's sad, but it's comical. I mean, it just goes to show you whoever was at the driver's seat at the Fed and whoever was at the driver's seat of our country, those are the two fingers you need to start looking at, And
Well, no, I read this morning, Fred. No. It's Ukraine and supply chain that's causing us to have this happen, which makes no sense to me, actually. There is no way that this is related to Ukraine or supply chain shortage.
You know what most people do?
None.
What most people do when they are at fault? What do?
Oh, point the finger.
At someone else.
Oh, it's Ukraine, it's Russia, and now we've got nuclear bomb drills in New York, and it's supply chain, and it's this and it's that, but it was failed. I don't want to break it to anybody. This isn't a Biden or a Trump thing. I would take it further back. This is Clinton. This is Reagan. This is everybody kicking the can down the road to get us to this moment again. I mean, why do we just keep cycling this? This is just such a failed effort constantly.
Well, it was supply chain issues and people
because of Ukraine. I saw it online.
Well, supply chain issues and people had money to spend. You take away that money and they don't have money to spend. And it was all the people that were sitting home smoking funny green stuff, getting paid more money per hour to sit home and smoke funny green stuff and play video games than they would make going to work at Walmart. They made more money staying home.
Of course
so
they did.
What did they do? They stayed home and they bought big screen televisions. They bought whatever else their money wanted to buy. And they did it with a big smile on their face saying thank you to the government.
Well, I go a step further because I've been scanning articles. They're actually pushing for people who didn't get their 2021 stimulus checks. Like there's a bunch of those still floating out in space, and they're pushing to get those into people's hands. Like there are a bunch of articles on the topic of how to get your hands on that money. And I thought, oh my God, you're just going to keep pushing this like till what? Biden's reelected?
Well,
I,
I read what Miles wrote right there, and Miles, I'll take it a step further. I think that anybody who is in default on a vacation home or an investment property, they need to be contacted yesterday.
yeah.
They need to be contacted immediately. They need to be slapped in the face, shooken back and forth violently until they listen to you saying, you better sell your house, better sell it. If you don't do it with me, I'm the hair club president for men. Go get help somewhere, but sell your house, and mean it when you tell them that. Because that, my friend, is huge what Miles is. I mean, it's now short sale is going to be for 2020, 21, and 22, but that's not until the prices drop a little bit. And it's going to be the 2022 people initially, and it's the ones that lose their jobs. So you just got to, when you look these properties up, you got to look at when they purchased them. Go pull a property profile and look when they bought them, so you can figure out exactly what their equity position is, because that's what you need to know when you go and knock on these people's doors, especially the investment and the second homes. Those are the.
I completely agree. No, this has become a ongoing topic of what's your best defense to everything that goes on. And this goes back to the Stephen Thompson $1 million conversion, right? Look at these 6 people who believed in a government program who lost out on $1 million worth of equity. And then he figured out that only 8% of people who applied for the Las Vegas arbitration deal would get approved. I said, that's 92% that are holding on to a dream that are losing out on money. Like you're talking tens to hundreds of millions of dollars. So when you go and meet with a homeowner, why wouldn't you take a BPO and show that equity off? Or go meet a 1 to 4 unit owner occupied type situation and show them the equity and show them that they're going to lose out on it. This market's shifting. There's no way anybody can deny that, unless we're talking South Florida. Okay. If it's not South Florida, your market is going to change in the coming year, anywhere from 6 months to the next 18 months, but you will show depreciation. Every market's showing more days on market. In general, pending sales are declining. This isn't ending. This is now, with the recession and everything else, this is more like a plague. It's a virus. It's the COVID of the housing market. I could say that.
So really, it comes down to how to use the data and how to talk to the homeowners with the information that we have. And that is just the situation where you got to let these homeowners know that, I don't know if you're aware, but they say you should buy real estate, but the Fed wants a reset. So guess what? We're going to see higher inventory levels. Mom and dad are going to talk about selling their homes and increasing the inventory. And then with the higher rates, because we're 3% higher than where we were, in November and December of 2021. So in the 8 or 9 months, higher rates, more inventory. lower prices along with the Fed reset. I would send a copy of that article out to all your previous clients, higher rates, more inventory, and the Fed reset article. Email that out to all your clients and ask them, when should you sell, before or after the home prices come down? If you want more good advice, please give me a call and we'll walk you through it. I think that's your sales pitch to all your clients. And I don't think it's a sales pitch at all. I think it's just saying, hey, are you aware that the sky is blue? Hey, are you aware that inventory is increasing? Hey, are you aware that interest rates went up? Hey, are you aware that the Fed wants housing prices to come down? Hey, do you think you should sell if you're thinking about selling, or should you wait a little bit to see what's going to happen with the market? Ask the question. It's what we're doing every day when we call back our previous clients, and we're having these conversations every day with homeowners. And I have not had one homeowner disagree with me yet that home prices are coming down. Not one. And we call them every day, except Sundays. So there's the, boots are in the field. We're in the minefields, and bombs are blasting all around us, and we hear them flying over our head, and we're just telling people, here's what's going on. Are you aware? Thank you so much for letting us know. Have a great day. No, we're fine. We're not selling, but thanks for the information. That's what we get.